Good morning, good afternoon, good evening. This is Rick Banez with FredREIA, Real Estate Investment Group, both in Florida and Virginia. Here are the January numbers for 2024. And before we get into that, let me start off with a little bit of trivia. All right, here it is. Trivia question. What does the term cap rate stand for in real estate? A, capital assessment percentage. B, capital appreciation ratio. C, capitalization rates. Or D, capital acquisition provision. All right, you guys can tap that into the bottom of the chat. That would be great. And let's get into the numbers. All righty, here we go. So for January 2024, new listings were up significantly. And this is typically normal. I will say that for January. Normally, December is a sleeping dog. Everybody's focused on presents, food, family, but they get serious. They make their New Year's resolutions and they are ready to sell. And you could see that we had a number of listings, 467. They're up from December, 75%. Again, very normal this time of the year. But if you compare it year on year from January of 2023, they were down about 2%, a negative 2%. The average for 5 years is 535. So again, we still haven't hit the 5-year January average, but it's definitely up if you want to look at a positive. In terms of pendings, we had 383. The 5-year January average is 497. That's almost 100 units less in pendings. Now, again, it was up for December, but in terms of the January numbers, it's down January on January, it was down almost 18%. In terms of closed sales, we had 324 closed sales in Fredericksburg. The January average, I'm sorry, the 5-year January average is 393. Last January of 2023, it was 303. So we actually closed more, up 7% compared to last January. So that's a good thing. In terms of the average median sold price, the median sold price was up from December of 2023, up 1.6% at 432,000. Last January, it was at 419. So we've seen a little bit of appreciation in the market from January of last year to January of this year. The 5-year January average is $379,000. So that's a longer term trend. And you could see from the chart that in terms of where we're holding on in terms of closed sales, you can see closed sales are down year on year, but at the same time, it's causing prices to continue to remain strong and steady. So what does that mean? It's a supply and demand effect. We have less supply, demand remains steady, and prices are going to continue to remain the same or go up. We haven't seen the sell-off. We haven't seen people rushing to the market to sell their home, and that is causing the prices to stay strong. And when we have less inventory, less sales, this is the effect of that. In terms of the another broad market to look at is active listings. We had 634 active listings, with 722 being the January 2023 average. And if you look at, how does this kind of trend max out, we're still on the very kind of the low end of active listings, but the average days on market is 39. So you're seeing a creep of that increasing because in December, it was 31. In January of 2023, it was 38. For January of 2024, it's 39. So you're seeing a creep up on the number of the days on market. The sellers are trying to, they're not agreeing to either the prices or the terms that are out there, and buyers are waiting because I'm speculating, but they're concerned with the interest rates, and so the buyers aren't as strong as they typically would be, and sellers are maintaining their price. Now, the average sold to original list price ratio, OLP ratio, is at 96.7%. Last month, for December, it was 97.9. So it's ticked up or I should say ticked down in terms of being more favorable for the buyer. Sellers are having to get off their original list price and are having to sell a little bit lower. Is it dramatic? Absolutely not. Less than 1% change from last month. And if you compare it to January of 2023, it's right on par. 97% is what January 23 came in at, and this month was at 96.7. Now let's look at the detail report, shall we? So in terms of, we talked about the median price. Let's look at the average sold price. So January, the average sold price was $466. Last January is $464. Not much of a change there, 0.41%. The average, I should say the sold dollar volume was up 7% comparing January to January, up to $152 million versus $142 million. And the units that sold for January were up 7% at 324 for this January and 303 for the previous January in 2023. We talked about the average days on market. Let's look at the attached and detached. And of course, we've explained this in the past, but attached stands for a townhouse, and a detached is a home that is a single family home typically. And so the attached average sold price has actually gone up to 8%. So January came in at 377. Last January it was 348. But if you look at the average sold price of a detached unit, it was actually a negative 1%, coming in at 479. The total units sold is a smaller base for townhouses. We sold 42 attached units, and the number of single family homes, the detached units, 282 units were sold. That was up 9% compared to last year. So many more townhouses well, I should say, more single family homes are selling more prevalently because frequently, just simply because there's more units, but the average sold price is actually higher for the townhouse or attached unit, going up 8%. So interesting data change there. In terms of the inventory, comparing this year to last, or comparing this month to last year, 634 active listings, down 12% compared to January of 2023. So we have less listings. In terms of pendings and all pendings, so new pendings, we have 383. That's down 17% from last year. And all pendings is also down 12% at 488. Again, no inventory or very little inventory. And that's what's keeping prices, maintaining prices where they are, going higher. In terms of the type of financing, we actually had the most popular was conventional. So conventional loans, typically these are not government backed. So the ones that are government backed are the FHA and the VA, but more people went with a conventional loan versus an FHA or a VA. So 110 went with conventional, followed by VA loans, which are veterans, 100% finance loans were at 90, followed by FHA, which is at 72. And then cash came in at fifth place with 40 units being paid cash. 3 were assumed. I love seeing those assumptions come in because that's an interesting opportunity for real estate investors. And 1 was other. All right, headed to the days on market. We talked a little bit about this, how it's starting to creep up. You could see that no one went past 6 months. So all the homes that have sold in the past 6 months, at least as of January, right? Okay, so the most popular coming in at 98. So this is the first 10 days. There were 98 units that were under contract and sold. That's how quickly you got to be the first to go out there and take a look at it to see if you have interest. Then the next 10 days, it was 11 through 20 were 38 units sold in the first 11 to 20 days, and 21 to 30 days, 23. And then after a month, So 30 to 60 days, 67 units went under contract and sold. So things are going a little bit more slowly. People are taking their time and making their decisions, and this is giving that slight price negotiation that buyers are making with sellers, and that's why you're seeing a little bit of 1% discount coming down on the original list price. When there's just some compromise. Buyers want to buy, and sellers want to sell, and that's where they're compromising just a little bit on the price. All right, so here's the detailed eye chart. I love this chart because it really gets into the minutia of how many units sold. When we start to talk about how many, you could see it broken down based on townhouses and single family homes. You could also see it based on 3 bedrooms versus 4 bedrooms. So you're seeing the biggest number of 3 bedrooms are in that 300 to 399 price band, followed by the 4 bedroom single family homes. The biggest number of units is in that 40 to 37 bracket, and that's between 400,000 to 500,000. So an extra $100,000 really is what it comes down to for a bedroom. That's what you're paying the difference in. And you could see that the demand in terms of the average sold change and the average sold price is coming in the 4 bedrooms. Of course, it costs more money. So the average sold price of a 4 bedroom is $584,000. The average sold price of a 3 bedroom single family home is $373,000. Obviously, these prices are quite higher than what we're used to seeing in the last couple of years. And of course, I think that's where some of the reservation comes in, with buyers being a little bit slower to pull the trigger with interest rates being so high as they are. If you could look to the right of your screen where it talks about active listings, and you can see the price bands where units are selling or not selling, I should say. So when you look at the number of active listings for single family homes, there's 127 units that are between $400,000 to $500,000, and that's followed by the next, or the first biggest number of units, is 132 units that are available for sale between $600,000 and $800,000. So you're going to see, if you're looking for inventory, or if you're looking at flipping a house, then, and you want to make sure there's enough margin on what you're trying to acquire it at, and what you need to put in terms of improvements, and then what you're going to sell it at. This is a really good chart to get into the details, because you can make some business decisions as to how much you're either going to acquire it at, and how much margins are going to be there based on the improvements that you need to make to the home. So I hope that helps everybody, and let's get into our trivia question. All right, so if you've typed it into the chat, this one, the answer is, what does the term cap rate stand for in real estate? So we don't typically use it for, home buyers, but definitely I've on the commercial side, a lot of people use the cap rate as a terminology, and the cap rate stands for capitalization rate. So the answer is C, capitalization rate. It's a measure used to estimate the potential return on investment, ROI, for real estate property. So investors use it, but not so much homeowners, I should say. How's that? It's calculated by dividing the property's net operating income, NOI, by its market value or its purchase price. The cap rate is commonly used by investors to compare different investment opportunities and assess a risk associated with a particular property. So hopefully you guys got that one right. Let's go through what's happening next. So this Thursday, we've got our next in-person meet and greet meeting at Wegmans on Carl D. Silver Parkway. So between 6 and 8 o'clock, come and join for definitely some networking and opportunity to see what people need and want and all that good stuff. And then our next online class is going to be on February 14th. It's the second Thursday of the month, and we've got a great guest speaker coming in. You can join us on live, or you can join us via YouTube. It's up to you. We're trying to make it more convenient, but we're also trying to get great guests. And so our great guest that we've lined up this March is Brian Maddox, and he's going to give us a state of the market update on the real estate market. So we hope you can join us. And if you have any questions, by all means, reach out to Anna or myself. Our contact information is below, and let me know if you have any questions, and we'll be happy to help. Thanks very much, everybody, and we hope you're having a great day. Bye-bye.